So we are doing October-November 2023. Paper number 21. Okay? It's
Yes.
a mixed sum of other receivables and payables, which we have to make the inventory account. We also have to make the provision for doubtful debt account, and we have to make an expense account. Are you with me?
Yes.
So you should know the format of all the three accounts. Inventory account follows the format of in and out, right?
So in is debit, out is credit.
In is debit, out is credit. Provision for doubtful debts account will follow the format of OCND. Old on
OCND.
the credit side, new on the debit side.
Miss, could you repeat?
OCND. Old on the credit side, new on the debit side. If old minus new is positive, then it is other income. If old minus new is negative, then it is other expenses. Are you with me?
Yes, miss.
Then we have a rent payable account. Now, since it is a payable account, that means it is an expense account. Are you with me?
So Popo B.
Expense account, that means it is the format of Popo B. Yes?
Yes.
Okay, fine. So we should know about this Popo B, that means P, O, P, O, B, and I. Are you with me?
Yeah.
Okay,
Yes.
fine. So let's go ahead. Keeping all these formats in mind, we will read and feed in. 2022 October 1.
Yeah,
Tell
miss.
me what will I do? 2022 October 1 inventory opening balance. So I'll write the balance begin down. Yeah,
Yes, miss.
this is your trade receivables and this is prepaid rent. Prepaid rent will
Yeah.
come
Prepaid rent is will it come in the rent payable
which side?
on the debit side?
Yeah,
Balance begin down.
balance begin down. So I will write balance begin down. What date will I write?
First day, 1st October.
Yeah, 2022 October 1. How much was the prepaid rent? It was 820. Are you with me?
Yes, miss.
What do you mean by rent charge for the year?
The total rent,
Is it the rent paid or expenditure for the year?
it will be written as income statement, right?
So this is the expenditure for the year. Charge for the year means expenditure for the year. So I will write it as income statement on the last date, that is the 30th of September 2023. So in
Yeah.
2023, September 30th, this would be income statement. How much?
Income statement is
4940.
4940.
It is the rent charge for the year. And then there are payments also during the year. One is on December 1 and one is on June 1.
So do we write the last date or
We
separately?
have been given separate dates, right?
Yes.
So if we are giving
Okay.
separate dates, so we will write separate dates. So we have two dates. One is 2022 is the December 1 and in 2023 we have June 1. Yeah? So it is
Yes.
bank paid during the year. So this is 2460 and one is 2490.
Yeah. Okay.
Are you with me? See, I am reading
Yes.
and I'm putting, I'm reading and I'm putting.
Yes, miss.
Yeah. Then there is closing
Yeah.
inventory. Opening inventory on the debit side. So closing inventory when? On
On
the
the opposite side, credit.
2023 September 30, I will write the balance close down. 8675. I have,
Miss, there was nothing in the balance.
sorry.
There was nothing in the inventory account except the balance being down and the balance closed.
Yeah. Now I have
Okay.
opening trade receivables and I have closing trade receivables. You should know that we have three accounts that we have to make. First is the inventory account, second is the provision for doubtful debts account, and third is the rent payable account. The trade receivable will help us to make which account?
Trade receivables, the inventory account.
Why inventory account? Trade receivable will help us to make the provision for doubtful debts account. Old provisions on the credit side, new provisions on the debit side. Old provisions will be created on the opening trade receivables. New provisions would be created on the closing trade receivables.
Okay.
Old provisions on the opening trade receivables, new provisions on the provisions on the closing trade receivables. So the provision is how much? 4%. Yes, provision is how much?
Oh yeah, yeah, 4%.
4%. So I'm just putting it over here. Old provisions on the first date. The first date is what?
First October.
2022, October 1. I will write my balance begin down. Old provisions on the credit side. So it would be 7,500 into 4%. New provisions on the debit side 2023 September 30. New provisions on the debit side. So it will be balance closed down. New provisions on the closing trade receivables. Closing trade receivable is 8,700 into 4%. So old provisions is how much?
What,
300.
miss?
Old provisions is how much?
300.
100. New provisions is how much? 8,700. But you should always remember that provisions are created as a percentage of what?
NTR, net trade receivables.
NTR. When I was seeing, I came across bad debts.
We subtract the balance.
Yeah, so new provision will be created as a percentage of 8,700 minus 375.
325, miss.
Okay, 325. So on 8375, 4% would become 335. Are you with me?
Yes, miss.
Then what do you do? Old minus new. Old
Okay.
provisions is 300. New provisions is 335. Old minus
So it
new is
gives
35
negative.
negative. If it is 35 negative, then it is another expense. If it is another expense, it will be written income statement debit.
So, Miss, we
Income
write.
statement debit, provision for doubtful debts credit.
Yeah.
On the provision for doubtful debts credit side, on the last date, what will you write? Income statement 2023, September 30, the difference 35.
Yeah.
Yeah,
Yes, Miss.
this will close 335, 335. It is mandatory to bring down the balance begin down 335. This is done with the provision for doubtful debts account. Are you with me?
Yes, Miss.
You have to find the closing other receivables. Is there anything in the inventory?
No.
So you have opening inventory and you have
And closing.
inventory. So what do I do? This is opening inventory 8,400. That means the entire opening inventory is transferred to the income statement.
Okay.
Okay. So this entire 8,400, there is no other information given to us. So this entire 8,400 will go to the income statement on the last date.
Miss, why, Miss?
Because opening inventory becomes a part of cost of sales.
Okay.
Okay. There is no other information related to inventory. There's nothing that is given to me related to inventory.
Yeah.
Okay. 8675 is the closing inventory. This this also you will write it to the income statement on the last day. Are you with me?
Yes, Miss.
Okay. Now let's go. You've completed all the three, right? Now rent a payable account. You have to close that account. Which side is more? I see the debit side is more.
Yeah.
I770. Yeah. So you will have the
Yes.
balance closed down. How much? 5770 minus 4940. It will be 830.
Yeah.
And on October 1, 2023, this will be balance begin down 830.
Yes, Miss.
With me?
Yeah.
So we've completed the three accounts. We've incorporated all this information. Now, principles. State how the principle of prudence is applied to value Logan's inventory. What is the principle of prudence for valuation of inventory?
Prudence principle states that the asset should not be overstated.
Inventory should be valued. The assets should not be overstated. Very good. If it tells you that assets should not be overstated means what?
It should be written at
At
a
lower of
realistic value.
cost or net realizable value. This is the
Yes.
inventory valuation principle. As per prudence, inventory is valued at, it's not to be overstated. That means it has to be valued at a lower price, lower of cost or NRV. Okay,
Yes. Yes.
go to the next one.
The matching principle is applied when the rent payable account is prepared.
Tell.
So the matching principle states that the profit should match with the loss
Income for the year should be matched to the expense for the year to get profit for the year.
profit.
So
Okay.
rent related to, only the rent related to current year is transferred to the income statement. So when I'm applying matching principle, only rent related to
This
current
current
year
year.
is transferred to income statement.
Yes.
Prepaid rent is adjusted before transferring to income statement. Yes, that is why we subtract prepaid rent, because it is not related to the current year.
Yes, miss.
Okay, go to the next one.
Yeah. Logan is considering buying business premises instead of renting. He would request a long-term bank loan to finance the purchase of the premises. Advise Logan whether he should purchase business premises using a long-term bank loan. Justify your answer with advantages and disadvantages of purchasing business premises using a long-term bank loan.
What is the advantages and disadvantage if he takes bank loan and buys the premises? Advantages. Advantages is
Advan-
taking bank loan and buying premises. Can you give me advantages?
Advantages, it could be the business will have more time to pay off its debts for the
Huh?
loan.
If he is taking loan and buying the premises, he will not have to pay rent.
Yeah.
Non-current asset would be created. Will become cheaper in long run. Hmm?
Yes, miss.
Asset value will increase. What is the disadvantages of buying premises?
Using a bank loan, right?
Hmm.
So it has to be repaid with interest.
Interest will have to be paid.
Yes.
Hmm.
And and what else, miss?
Rate of interest can be higher. Security might be given. Security might be needed. Okay.
Yeah.
It may take long time to obtain loan. So what do you think? You should take a loan and buy premises or no? Buying
Yes,
a
he should.
premises is always good because in future the value of asset will increase. So he should buy the premises even though if it is by taking of a bank loan.
Yeah.
So with this I complete October November 23 paper number 21. Question number 3 with you.